Hello everyone, Mike Arnold here, co-founder, Path Trading Partners, along with Bob, the Madman Iacchino. So, checking on silver, also got an email from one of our subscribers, thank you very much, asking about how to do trailing stops on vertical up moves. I said I mentioned it in a different video, and I'll go over there. It's sort of a tough thing to answer because it depends on how active a trader you are. I'll cover the stuff. I'm going to use silver to sort of cover it. So you see silver's gone up again, big gap up yesterday, slight gap down today, but then rally into the close. We had this major cluster area up here just above 2284. You can look for that in my last silver video. We're up to 22.97 already at this point. Let's see here. Which one's this? I'm going to update this to right here, at least to give us an idea. I'll double check that, what the next levels are. Now, to answer that stop question. So when stuff's on a tear like this, I mean, this is, well, I'm really bullish on silver, but they sometimes go too far too fast. This is, I mean, a normal move. Let's see. You know, sometimes you get this, but then look at the parabolic at the end of this here. Let me zoom in on this from, what was that, September of 19. See when it goes on a tear too fast and then it comes back and then it just sort of dies and languishes. And this was a down move way too fast. Now, this was the good, I didn't consider this move too fast because it was recovering another move. So this was vertical down, starting to go vertical up, but now we're getting vertical up, pulling too far away from the rotation zone. Just the opposite on this down move where it pulled too far away. See how extended it got? Then it snapped back. Same thing can happen here. Don't know when exactly that's going to happen. We do have some warning signs. So you can see here on the daily, we have a higher high in price, lower high with this hook down on the RSI. So we have the first divergence. Okay? I'm going to be watching for this gap fill. Because if we get the divergence will be confirmed if we get a close below today's low, especially on a 4-hour chart, 2207, then I'm going to watch for the gap fill. So now this leads to the stop question. I got to give it some room. If I was hyper aggressive, really active day trader, I could put a stop below today's low, even intraday. You know, and I don't put stops in markets. We don't do that here at Path Trading Partners. We know where they are. They are on spreadsheets. They are actually, we get alert systems through TradingView and our other trading packages. So we get alerted if something's happening, and then we can take advantage of it. So if we started trading below today's low, then if I was hyper aggressive, I'd be out because I'd be watching for the gap fill. That would be my first maybe opportunity to add back. And I'm not talking adding back for a longer term position. Now, if I'm not as aggressive, my stop would be somewhere below this 12.5% level. Maybe I'm just so an active day trader or a swing trader. Why? Because I'm going to give it some room to breathe. It could easily pull back here. Let me drop to the 4-hour rotation zone. Pull back here, be in the rotation zone, fill the gap, and rotate back up. So I don't want to be too aggressive with the stop. You know, and it just is the thing with today's low, that's where the top of the rotation zone is encroaching on. So that's the key level I will be watching. Now, if I'm more just a swing trader, a longer term trader, I'm going to keep my move back below this 25, somewhere in the middle of the daily rotation zone. We have another gap fill here. I'm going to put it somewhere below this. So yes, it could come back down, retrace, and then rebuild a base. So it really depends on how aggressive you are. For this move, based off what I know I'm watching for, I am getting more aggressive on the stop, giving it a little room to run, letting this possible gap fill play out, but then not giving it the whole huge pullback, because if it does pull back aggressively, especially if the dollar finds a base and we get a little rally in the dollar and a sell-off in the euro, then silver can also start pulling back as well as gold. Now, to the upside, because this is not just a video for one person, this was the pausing bar. So above 22.97, so essentially above 23.87 to 24.17. And then 24.76. If you want an idea above that, we can move this up here. So we still have the 24.48 to 24.76 area, but above there we're looking at $26. So if this thing continues, which is why we don't want to crowd a stop ridiculously close unless you're prepared to get out and right back in on a gap fill. You're just going to trail it and then watch for these targets. Now, considering we have a divergence also, remember we had one on a daily, 4-hour chart. Higher high in price action, lower high in RSI. A lot of times in these super bullish moves, you can get more than one divergence in a row. So that's not some guaranteed sell signal or take profits, but it means when I start seeing divergences, I'm not going to be careless with my stop, especially when a market has gone very far, very fast. So keep that in mind. That's why I'm pointing out these divergences to you. And just to keep another thing in mind, look how far we are off from the weekly rotation zone. Not saying it can't go higher, but we have this weekly gap here, which can easily be filled. And even a normal retracement move, just back to weekly rotation zone, could actually take this back below 20 bucks. If it does collapse at some point, back down. As I said before, bullish on silver long term, but very cautious at this point. So we have for you on silver, and we'll talk to everyone later. Bye for now.